Hello again. We continue our Trading Academy project here on top-rated-forexbrokers.com with one of the most interesting sections of the project, namely, what is fundamental analysis? So I'll start by splitting the screen in two. So let's put the title here as fundamental analysis. You might be surprised to find out that not many traders fully understand what fundamental analysis is. First of all, what moves the market? This is the Forex dashboard, the market watch. The market is open and the euro US dollar is 118 and here's the Japanese yen and so on. What moves this market and why? Why does the bid and ask prices move? Because this does not represent the supply and demand that is on the stock market, for example. Because on the stock exchange, if you pick any stock, any symbol that you want, and if you buy enough of some shares or you sell enough of some shares, then you may actually influence prices. The problem with the Forex market is that it's so big and the liquidity is so huge and no one entity can influence the way the market moves. Therefore, why do we have these sort of spikes, for example, like this? And a spike lower on an hourly chart. Maybe even a spike higher, like this. This high spike here turned out to be when the Federal Reserve of the United States announced the FOMC statement a week ago. And from that moment, the market simply consolidated. But this high spike came in 1 hour. What made the market move in that 1 hour? There are two reasons why the market moves. One is technical analysis. Now, technical analysis means, for example, you look at a chart like this one, and you use either a trading theory or a technical analysis based on trend indicators, oscillators, volume ones, or whatever you want. There are tons of trading strategies, or you can simply use fundamental analysis. So for fundamental analysis, this is what you do. You interpret the world surrounding you. How do we do this? Well, look at these currency pairs. Pick one. The US dollar Canadian dollar now trades at 1.2478, but it is a currency pair. The two currencies represent two economies, the United States economy and the Canadian one. The currency pair will move or reflect the differences between the two countries. What kind of differences? First of all, the economical differences, namely, if the US economy performs better than the Canadian one, then you see the US dollar Canadian dollar moving higher. On the other hand, if the Canadian economy performs worse, the US dollar Canadian dollar will move high, and so on. For economic news and fundamental analysis, the main driver is the economic news. We will cover the main economic news in our next video, but here we'll talk about GDP, or Gross Domestic Product. The total value of goods and services, retail sales, inflation, interest rates, central banks discussing something, and so on. We'll leave this one for now. But these are the economic news, and there is an economic calendar for it. The market expects the news to come, and then a sudden move happens. Even a sudden move, like the one that I showed you here with the FOMC 1 week ago. Even this kind of move is not possible due to human trading at the same moment of time when the news is released. What happens is that the algos, or trading robots, the supercomputers that make the high-frequency trading, these algos will buy or sell as they are programmed to buy or sell at the same moment and during the same second or millisecond if an outcome gets out. For example, on the economic news, you have inflation data, and inflation in the United States beats expectations. So it's bullish to the dollar. Hence, the US dollar Canadian dollar in our example will move higher. But it will move higher if indeed inflation beats expectation. It will move higher in the blink of an eye because all algos with super execution powers will buy or sell at the same moment. Only after this, humans will come and join the party. This is why you have reactions when the economic news, which is part of fundamental analysis, hits the wire. So what else? We have fundamental analysis, but how about macroeconomics? What does this mean? Economic news refers to each economy, in particular the one in the United States, the Eurozone economies, the Japanese economy, and so on. When you consider macroeconomics, you look at the macro picture, the global conditions. In this world, things are already divided, and we cannot interfere in this kind of order, at least not as ordinary human beings. So what kind of order are we talking about? First of all, let's take a shape to discuss this. So this is the world, right? Let's change the colour on it. In the United States, represented here, we have the US dollar. And the US dollar, as we all know, is the world reserve currency. So let the United States share in this order. China, on the other hand, is the world's manufacturer. China, on the other hand, is the world's manufacturer. Everything can be manufactured in China, and I mean everything, quote unquote. Most things around us are manufactured in China. When China sneezes, the whole world trembles. When China doesn't grow 7% or 8% and the whole world wonders what will happen next, if we talk about commodities, we talk about Africa, we talk about Canada, and we talk about Australia. And then where the demands move and so on. So there is a specific economic order in this world, and this economic order influences macroeconomics. Everyone is searching for a higher yield and as high as possible. When interest rates in the United States, for example, were down to zero levels for years, when quantitative easing 1, 2, 3, 4 and so on took place, what happened with the world? Well, investors looked for other macroeconomics opportunities to invest in and, of course, to search for a better yield. So macroeconomics means that power over a specific region shifts towards a different region when conditions get better in a different region. But this is only another part of fundamental analysis. In fundamental analysis, we have referendums. Remember the Brexit one? Remember what happened in the UK when they decided to take a vote to see if the people wanted to leave the European Union, and if so, then they would leave. Well, they voted, and it created a huge shift on the Forex market, and that's fundamental analysis. Or take the elections. We have plenty of examples. We had the US elections last year in November. And we had the French elections this year, which caused the euro to get higher and to continue to rise from 106 to 120. We had the German elections quite recently, and so on and so forth. So these are elections, and this is still fundamental analysis. One needs to take into account these kind of events. Why? Most of them happen over the weekend, and over the weekend you will never know how the market will open on Monday. There is a risk that your broker will not fill your order if you have a stop loss. If you have no market, then your broker will skip your stop loss. Only now, everything we've discussed here is fundamental analysis. Part of fundamental analysis is everything that is not technical. Be it thunder, be it an earthquake, be it macroeconomic, economic news and referendums, a hurricane that can have a devastating effect on the economy. This is fundamental analysis and fundamental news, and this is the reason why the market moves. Now, I may make it sound like it is the only thing that matters, but in reality, it isn't. It represents only the reason why the market moves. Technical analysis gives it direction, or the most likely direction of the market. But you need a catalyst, and that is fundamental analysis. Let's move on with how to make the most of the economic calendar and the news that comes and hits the wires every day and every month.